Okay, so today, so today I'm going to be doing something that is quite different. Today I'm going to be reacting to advices I've seen online on trading regarding trading and forex trading. I've been here for quite some time. We've seen a lot of truth, lots of lies, and truth be told, I just want to see all these videos and
I didn't have a personal stream of income of my own. So it's like I want trading to be that thing. I had one friend in the US, right? I think it was my birthday, and then she just sent me $300. I didn't think twice, I just put the whole money into my trading account. And also, for some reason, maybe because of my experience in the finance space, I didn't particularly go through that beginner's mistake of just throwing some outrageous lot sizes and then blowing your account. I was literally doing the minimum lot sizes available. I didn't have.
okay, that's like a good thing. It's a good thing. If you are starting trading, right? A lot of beginners throw lot size without knowing what lot size actually means, the implication. So it's a good thing if you start trading, you start with like really, really small lot sizes. It is a huge helper for you as a trader. It would totally, totally help your life that you do not fall into that pit of losing all your money just because you thought that you knew what you wanted to do. So beginners, small lot size, that's true. Okay. Okay. I don't know who made this video, but it's not real. That's the truth. It's not real. Traders don't just sleep, wake up, trade all day and sleep off. I mean, traders have lives, right? A lot of traders have lives outside their computer. They go out, they hang out, they have friends, they go out to eateries, they spend the money they make. I mean, why the fuck are you making money if you're not spending it in the first place? So this video, it's tried, but it's not really worth trading.
For me, I won't preach to you to use small lot size. Never. I will never preach to you because I never got rich using small lot size. Right? So you want to make the money, know your lot size, but know your risk. Know your appetite. Know what you can take. And trust me, it's successful. For me,
Okay, so this is a very popular Nigerian trader, Habi Forest, and said he never got rich using small lot size. Yeah, it is true. The more you risk, the more you can gain, obviously. And I like the fact that he says know your risk, know your appetite. So he's trying to tell you that he has an appetite for risk. He's a risk taker. That's what he's just trying to tell you. He takes a high amount of risk to get what he wants to get. But if you're not strong enough for that, don't do it. That's what he's trying to say. But what he literally just said is it is adequate and proper for you to use smaller size, but because he's a risk taker, him personally is a risk taker, he likes to take on more risk, which in my opinion, don't try it if you're a trader. If you're beginning, if you want to just start trading, don't try it. Learn the thing first before you start to take on risk. It's like telling a 12 years old to take a Lamborghini Urus and floor it because he's a risk taker. He's going to die. If he doesn't die, he's extremely lucky. That's the truth. He is just lucky. So what he literally said is he was lucky to play with larger risk lot size and escape. But the real deal, my dear friends, you might not be lucky. For you to be lucky, it means that you are one of the very, very few. So what makes you think you are one of the very, very few who will be lucky? Don't do that. It's not a good advice. He's giving you an advice. It is correct. It's a very correct advice if you hear exactly what he's trying to say. Let's move on to the next.
You know that the vast majority of people, when they make money, they'll have a tendency to reduce their trading size because they want to avoid the pain of losing some of their gains. And I swear to God, 99% of the trading population just doesn't get it. When I win, I don't bet less. I bet more. The more I win, the higher I bet. See, you can think of this in two ways. You can say, well, I like to think like the 10%, or you can turn it on its head and say, I'd like to not think like the 90%. And so you almost can do a self-analysis and say, well, how is it that I tend to think? It doesn't matter whether you trade currencies or commodities. It doesn't matter whether you're a scalper, an intraday trader, or an investor. If I'm in a winning position, I don't sit and congratulate myself. No, I want to get that position bigger and bigger. You know?
Okay. So this advice is more it's more of I take risk, right? It's more of I take risk. It's not taking risk is not bad. Actually, the game of trading is take calculated risk. Very, very calculated risk. If your risk is not calculated enough for you, you shouldn't be taking it. If it's not something you can survive from, you shouldn't take it. That's the truth. But I like what he's saying. If you are making money in trading, let's say you have a $10,000 account or a $100,000 account. Let's just assume a $100,000 account, right? Place your first trade, you made $1,000. You're now 101. Place your next trade, you made another $1,000. You're now 102. If your risk is still 1,000, by the time you get to 110, 120, you are wrong. Because if you check it out, your account is actually like 100%. Take it to being a percentage. If you are risking a percentage. So if you take, let's say, you're risking 10% of that account balance, it means if you risked, let's say, $10,000 in a $100,000 account, $10,000 is the risk, is the 10%, right? You risk 10%, you made 20K first time. So you now have 120. 10% of 120 is no longer 10,000. It is now 12,000. Guess what? If you lose 12,000 from 120, you are still up $8,000. That is, you're still up 8%. Do you get the logic? So the more you win, your risk should follow your account balance. Same thing with when you lose though. You lose, your risk should come down with the account balance. That's like really good advice in my opinion. Yep. This is something that I think is true. I'm not up to 8 years yet, but I think it's true because I remember when I started trading the first time about 3 years ago, I blew 100,000 naira account accidentally, but I will not explain that. It was 120 something K actually, but I blew it. I blew it trading oil at the wrong time, just before the invasion of Ukraine. Oil price went up and my account went out. Fast forward 2 years later, when I started trading again, I noticed something changed, right? When I decided that I was not going to be looking for signals, I'm not going to be looking for mentorships and all that stuff. I just want to learn the real deal. I realized that my trading has started to turn. If you look at my videos, you realize I lost about 2% of the accounts, and then I came back about 5%, and I'm becoming more profitable. So over time, it is going to become more profitable if you keep on doing it.
What's your opinion on day trading versus starting a business?
Even if you're the best day trader on earth and you start with $1,000, you can't turn $1,000 into $1 million within 3 years. Just day trading. Whereas you can take $1,000 and turn that into $1 million with a business. You as a person is the best income generating asset that you will ever have. So focus on you. What's your
This I know when people think Imam Gazin is a scam. I don't know if it's a scam. I'm not gonna say he is or he's not, but this is the most realistic advice I have ever heard anybody talk about. Business, right? You see business, you take $1,000 into business and you are aware of what you are doing in business. You would so blow that money up. Right? You will so blow that money up in 3 years, you'll be so freaking rich. If you take $1,000 into trading and you're so aware of what you're doing, right? As aware as you are, getting it to $1 million, it's a miracle. It's not as if it doesn't happen, but it is a miracle. $1,000 to $1 million in business is far more possible than $1,000 to $1 million in trading. Far more possible. It doesn't mean the other one is not possible, but it is far more possible with business than with trading. Why? Because trading, we do not know. Business, we know the market. That's the difference. And like you said, focus on you, yourself, as a trader, as a person, yourself. What are you doing to make this money, this cash flow increase?
The fastest way to wealth is scalping. The fastest way to change your situation to whatever it is that you want to do within the markets, it will be scalping. Let's say one trade would have been 200 in a day. Those 5 trades that you now can take ends up being 1,000 in a day, ends up giving you 2 days off at the end of the month. Now you have a couple savings up to where you can take time off and actually learn this. And that scaling, unfortunately, is only going to come through the lower time frame, the fast.
Okay, the fastest way to make money is scalping. The fastest way to lose money is still scalping. So I'm more of a risk off kind of person. I do not like to take unnecessary risk if I calculate the loss rate for it is too much. The losing rate for scalping is way too high for you to call it the fastest way anymore. It is the fastest way if it is a successful way. So, in my opinion, scalping is not the fastest way to making money in trading. Because, again, why do I say so? It is the fastest way to make, it is the fastest way to lose. It is faster than day trading, intraday, position, swing. Way more faster than that. And this is the real big problem. Unlike the higher time frame traders who are trading based on economic data, you are trading based on everybody's individual expectation of the market at any given point in time. And we all switch at every given point in time. What do I mean? I could be buying right now, and because I just see a bearish candle, I would want to sell. And same thing with so many other traders, and that will now take the chart downwards. But the general consensus of the market is actually bullish. At the end of the day, the market will end up, but because I panicked out due to 1 or 2 candles and so many other traders, you might just be at that right spot where your stop loss gets triggered in scalping. But as compared to higher time frame traders, it is rare to find people jumping out of position if there is no real fundamental backing to it. And fundamental information is something that everybody knows. So everybody has it. The news, GDP, PPM, PPI, CPI, gross goods trade earnings, everything. It is the news that we all hear. So in my opinion, scalping is not the fastest way to make money. Doesn't really make sense to me.
What's your opinion on day trading?
I think anyone starting trading is going to lose money for several years. You know, you're looking for a career that pays a lot of money. Everyone trading wants to make a lot of money. You're competing against extremely smart people, and it's essentially a zero-sum game. So you're trying to take money from really, really smart people who are trying to take money from you. And when you start out, they're going to win. You're going to lose money. If you have the discipline and you're careful and you learn how to be objective and you try not to be greedy and use stops, use profit targets, I believe it's something that you can do.
All right. I like this advice, but I'll have to not collect it. Why do I say so? So you are trading against people if you are scalping. You are trading against the fundamental understanding of what the market is if you are swing or position trading. What do I mean? So the news is literally the trend of the market. If your economy has good news all round coming in, investors are going to be coming into your economy. The value of your economy is going to grow and it's going to show in your currency. The value of your currency is going to rise up as compared to any other currency. Now, the rate of the increment of your country's development is what is seen in your currency as bullish. Same thing as every other economy. So when you now pair your economy, is your rate faster than this other person's rate, or is your rate slower than this person's rate, either bullish or bearish? So if both of you are having bad economies, but one is running at a faster rate being bad, people will end up coming more into the less bad economy than the worst economy. That's it. That's the truth. So you're not trading against people per se, though people are what you're trading against, but you are trading against the information available in the market.
First of all, if you want to become a day trader, have a plan when you get into a stock. Ask yourself, why am I buying or shorting this stock? Okay? And the only two reasons to do that are either price action or technical analysis. On every trade that you make, you must have a stop order. If you have a mental stop, you're mental. You have a stop order and you never change it. If you're in a trade and it goes against you, you're out of the trade, you move on to the next one. If you're in a trade and it becomes successful, take a profit while you can. Up 50 cents, up $1. Move your stop order up to break even so you can never turn a winning trade into a losing trade. And then use a trailing stop to make as much out of your winners and lose as least out of your losers. If you're having a bad day, and we all have bad days, 3 losing trades in a row, you turn the machine off and go home. Doesn't make you a loser, doesn't make you a bad trader. You'll come back from a bad day, you'll come back from a bad week, but you will not come back from revenge.
This is the best scalping advice out there for people who scalp, right? For people who scalp, the best scalping advice out there. It is easier for you to make 3 trades and stop. It is easier for you to say it than to actually do it, because revenge trading, that is something that if you are coming into trading, revenge trading will hold your life. Trust me, it will hold you ransom like this at some point in time. But if you've been here long enough, you start to understand that it's not even worth it. For newcomers, go ahead, it's normal. But over a period of time, you realize, you know what, and also stop losses. Stop loss. You set a stop loss, you're not changing it. You're only changing it into a better angle, meaning you are moving it to reduce the amount of losses you will get, not increasing it to increase the losses you will get. Because if you are increasing your stop loss, my friend, it will keep chasing that stop loss till you stop you out, and then it will stop you out with way more losses than you ought to already had in the first place. So it doesn't make any sense to you to increase your stop loss. For a scalper, it is good. I tried scalping when I came into trading the first time, and since I switched to swing trading, I lose trades, but I am more at peace when I lose than when I scalped. So this is my opinion for the videos we watched today. I might do another video tomorrow or next, or probably during the week, something like this. But I just wanted to react to like some advices I saw online today, and give you guys my own personal opinion in my 4 months of being serious and 1 year. Actually, it's 1 year plus now of taking trading over and over and over again every day consistently. Thank you all for watching, and I'd like to catch you guys in another one. Do well to hit the subscribe button and like button if you like this video, and leave a comment below if you like more of this kind of content. Truth Talks. Peace.